Good morning. We will pay attention to fixed assets today, especially asset disposal. For grade 11 and 12 pupils, this is a very difficult calculation and entries that you have to do. The main reason why you battle with this is because you don't work systematically. So please do this whole entry in separate steps that you know if I follow the steps every time, I will get this correct. And this disposal of asset is very important. You will always get it in all your tests and exams up to the end of grade 12. So it means you have to understand it immediately to make your life easier in the future. Okay, so the first step that you have to do is calculate depreciation for the current year on the asset that we are selling or disposing of in another manner. So we normally do depreciation only at the end of the year. If I use this asset for a few months in the current year, it means that I will have to write off depreciation for these few months so that I can get my books up to date for the until the date that you sell this asset. Now, when we sell an asset, we first work out what is the depreciation on that asset from the date that we purchased it until the date that we sell it. Now, for the previous years, we've already calculated depreciation. So in the current year, I will calculate depreciation is the expense, so I will debit my depreciation account. Accumulated depreciation is a negative asset, so I will credit my accumulated depreciation account. I just want to draw two T accounts for you so that you can just see why this is done in this specific manner. Okay, if we look at the vehicle account, for instance, this is my positive asset. So asset always has a debit balance, and every time when I buy assets, I will write it on the debit side, so my assets will increase on the debit side. Now, if I use this asset, it means that the value of the vehicle decreases as we use this vehicle. If I write the depreciation on the credit side to decrease this value, I'm going to have problems later because I'm not going to be able to determine what was the cost price and what is the accumulated depreciation. And according to IFRS, you have to show the cost price at the beginning and end of the year in your note, and you have to show the accumulated depreciation. So to prevent that problem, that you put everything in one account, we create an additional account, and that is your accumulated depreciation on a vehicle. So this is my negative asset account. I use this account to decrease the value of my asset. Now, if I decrease it directly in the inventory account, I'll do it on the credit side. So that means the accumulated depreciation on vehicles must always have a credit balance, because in the balance sheet we'll take the cost price less the accumulated depreciation to determine what is the carrying amount. Okay, so this balance is on the credit side, and every year when we write off depreciation, we will add it and calculate what is the new total accumulated depreciation. And as soon as the total amount on this side equals the price that we paid for the asset, then we will not write off depreciation on the asset anymore. Okay, so that's step one. Now we've got our books up to date. Then I have to show that I don't have this asset anymore. So I must take out the asset and transfer it to the asset disposal account. So asset has a debit balance. If I want to reduce it in my books, I must credit the vehicle or equipment account with the cost price that you originally paid for it, and I will debit asset disposal with that amount. Now, because these two accounts form a unit, it means if I take out of the vehicle account, I must also take all the accumulated depreciation from the date of purchase up to the date of sale out of the accumulated depreciation account, so that the amounts that's left over in these two accounts will only be figures on existing assets that we are still using. So step 3 will be to transfer this total accumulated depreciation from date of purchase to date of sale, and accumulated depreciation has a credit balance, so we will debit accumulated depreciation and we will credit asset disposal. So now in this asset disposal account, I can determine what is the value of my asset at this stage when I want to get rid of the asset. So I take the cost price less the accumulated depreciation, and that will give me the carrying amount. And that means this is what it is worth on the day that I dispose of the asset. Okay, if we look at the proceeds, now I want to see how much money do I get for this asset. Okay, so if I sell it for cash, anything that I sell for cash, I debit bank and I credit asset disposal. If I sell something on credit, I always sell it to debtors, so I will debit debtors control, credit asset disposal. Now, the trade-in is one of the things that you normally have a problem with. So I just want to show you with a T account quickly why it's done like that. So I go and I buy a new vehicle, for instance. So that means on this side of the creditors control, I will show this new vehicle cost 400,000 and I owe my creditors 400,000. And I will debit my vehicles account to indicate that this asset increased with 400,000. Now instead of giving them money, I give them my old vehicle to pay part of my debt. So that is why we will credit asset disposal, because it doesn't matter how I dispose of the asset, we will credit asset disposal every time, and I will go and debit the creditors control. And say, for instance, they give me 100,000, then I reduce my debt with 100,000, and that means now I owe 300,000. So you can't go and show in the vehicles account 300,000 because you want to know the actual cost price of the asset. If you show there 300,000, it means that you don't record the cost price of the asset. So the full amount must go to creditors control on the credit side, and then you will credit your asset disposal account and you will debit your creditors control to decrease the amount that you owe. So for instance, the owner takes it for its own use, then it's drawings and asset disposal, donated to a charity, donation, asset disposal, and if it's destroyed in a fire, burglary, written off in an accident, whatever, and you don't have insurance, it will be loss of asset. If you have insurance, you will debit insurance company if they still have to pay you the money, and if they already paid you, you will show that the bank is debited. Okay, so now what I've done, I put my cost price and my accumulated depreciation in the asset disposal account, and I also recorded the amount that we received for this asset. So the whole purpose of this asset disposal account is that I can calculate in one account whether I made a profit or a loss. So if I sell the asset at a higher price than the carrying amount, so if I take the cost price less the accumulated depreciation, I get the carrying amount. So that's what it's worth. If I sell it at a higher price, I will make a profit. If I sell it at a lower price, I will make a loss. And that's my 5 steps. So all 5 of these steps is done on the date of the disposal of the asset. And do it in the same steps every time when you do a question, because if you do it in different orders, then that is when you get confused, because then you can't remember what you still have to do or what you've already done, and you look at the figures incorrectly. Okay, then at the end of the year, we also have to calculate depreciation. So in the middle of the year, the date on which I sold the asset, I calculate depreciation for the number of months that we used it in the current year. That was the step that we did at the top. Step number 1. Then I go and I look at my old assets. Assets that we bought in previous years, but we are still using it at the end of the current financial year. So on those assets, we will write off depreciation for 12 months. Then we bought new assets during the year. And on these new assets, we will calculate depreciation for the number of months that we used it in the current year. Now remember, on the date of the disposal, it means that we will write on that date. We will show depreciation in my depreciation account and in my accumulated depreciation account. At the end of the year, although we do 2 calculations, one for the old that we've used previous years and one for the new, I will add those 2 together, and that will be the end of the year depreciation. So it means that is the amount that I will record in my depreciation account and in my accumulated depreciation account, and it will only be one amount. We're going to do a question on asset disposal as well, but I'm going to do it on a different video so that the recordings don't get too long.